Welcome back to Wealth Signal. I'm Alex Carter, and today I'm going to show you the most obvious buy hiding in the market right now, the one everybody is ignoring because they're too busy chasing what already went up. Right now, the most obvious buy in the market is hiding in plain sight, and almost nobody is looking at it because everyone is too busy chasing what already went up. Memory stocks, AI chip plays, names that are up 80%, 100%, 200% already. And if you missed them, you're probably sitting there right now feeling like you lost the game. But here's what I want you to understand today. The game isn't over. It's barely started. And the biggest opportunity in the market right now? It's not in the names that already ran. It's in the names the market forgot about.
We're going to break down exactly which companies those are, and more importantly, why the data makes the case for them right now, not 6 months from now. I've gone through the earnings, the growth rates, the valuations, and what I found is this. There are a handful of world-class businesses sitting at prices that genuinely do not make sense given what their fundamentals show.
If you want to build real wealth, not just chase the latest hype, hit that subscribe button right now. We break down what the numbers actually say, not what the crowd wants to hear.
Let's start with where we actually are in this market. The first few months of 2026 were rough, especially if you owned growth stocks, tech names, AI-related companies. A lot of pain. But since late March, things have turned. Hard. Semiconductor names are flying. Memory players, companies in the storage and memory space, had a phenomenal run. Some AI infrastructure names are up double digits just in the last few weeks. And here's the thing. A lot of investors are sitting there right now comparing themselves to whoever got lucky on those trades. They feel left behind. They feel like they missed it. Stop. Just stop. Your portfolio has probably had an incredible 2023, 2024, 2025. So some sectors ran ahead of you for a few months in 2026. So what? That's not losing. That's how markets work. Here's the mindset shift you need. This is not a competition against other investors. This is you versus your own financial goals. Over a long enough time horizon, and I mean 5, 7, 10 years, your job is simple. Outperform the market. That's it. Short-term comparisons are the enemy of long-term wealth. The investor who sold a great company at a loss to chase what was hot last month? I've watched that play out 100 times. It almost never ends well. Let me give you a case study in patience. Nvidia. For 7, 8 months, Nvidia did absolutely nothing. Investors were complaining, frustrated, looking for the exit. Why is this stock not moving? Meanwhile, the business? Growing at an extraordinary pace. Today, Nvidia just posted one of the strongest quarters any company has ever reported. Revenue up 85% year over year. Data center revenue, their core engine, up 92%. Operating income up 147%. Net income up 211%. And yet, the stock dropped the next day. Why? Because Wall Street wanted more. Because the hyperscalers, the big cloud companies, are also building their own chips. Because competition is growing. Because markets always worry about something. But here's the number that matters. Nvidia is a $5+ trillion company. They're projected to grow revenue by over 72% this fiscal year. Over $1 trillion in expected revenue from their Blackwell and Rubin product lines between now and 2027. They just announced an $80 billion share buyback program. They're targeting 50% free cash flow return to shareholders. And they have zero China revenue right now. Zero. Because of export restrictions. That's not a risk. That's a future opportunity sitting at zero, waiting to turn into real dollars. The lesson here isn't buy Nvidia today. The lesson is this: when a great business goes through a quiet period, that's not a warning sign. That's often where the opportunity lives.
Which names are sitting in that quiet period right now? Drop a comment below. Tell me which stocks you're watching, and I'll tell you what I see in the data.
Here's the company I want to spend the most time on today. Because when I look at the risk-reward across everything in this market, nothing stands out to me more clearly than this one. Meta. Market cap, around $1.54 trillion. P/E ratio, 22 times. Year-to-date performance, down 8.2%. Think about that for a second. A $1.54 trillion technology company. One of the most profitable businesses ever built, with 26% revenue growth over the last 12 months, 3 billion daily active users, and it's down on the year. That disconnect between the stock price and the business reality, that's the definition of opportunity. Now let's talk about why the market is hesitant, because there's always a reason, and it's important to understand it honestly. CapEx. Meta is spending aggressively on AI infrastructure. That spending is going to keep free cash flow compressed for a while. The market doesn't love that uncertainty, and some investors are asking, is all this spending going to pay off? That's the legitimate concern. It's real. But here's the other side of it, and this is what the data shows clearly. Meta's core advertising engine is performing at an extraordinary level. Revenue grew 26% last year on a base of $214 billion. These aren't startups. This is a mature revenue machine that's still accelerating. At 22 times earnings? For a business growing this fast? That is not expensive. That is a gift wrapped in concern. Compare that to chasing memory stocks or semiconductor names that have already doubled. The risk-reward there? You're paying for perfection. One miss on guidance, one hiccup in the cycle, and those valuations compress fast. With Meta, you're being paid to wait. The business is growing. The moat is enormous. And the stock is down because of macro uncertainty and spending concerns, not because anything is fundamentally broken. I'll say it clearly. At current prices, Meta is one of the most straightforward opportunities I see in this market. Let's talk about two more names that tell a similar story: Google and Microsoft. Microsoft is down 7.9% year-to-date. Google, Alphabet, is one of the best-performing large caps over the last 12 months, up 138%. But 12 months ago, it was sitting right where Meta is today. Hated. Overlooked. People asking, why buy Google when other things are moving every day? Those who asked that question and didn't buy, I think about them every time I look at that 138% gain. The business case was simple back then. It's simple now. Google has one of the deepest competitive moats in the world: search, cloud, YouTube, AI through Gemini. Massive cash generation. A management team that has proven they can adapt. Microsoft is a slightly different story, but the same principle applies. Down on the year. But look at the fundamentals. Azure Cloud growing consistently. Copilot integrations across enterprise software. Gaming. LinkedIn. A cash flow machine with a balance sheet most governments would envy. I'm not saying Google is going to repeat 138% next year. I'm saying something more important. These are the kinds of companies where, when you look back 5 years from now, you'll wish you bought more when they were flat and unloved. Quality businesses at reasonable prices. That's it. That's the whole thesis.
If this breakdown is making you think differently about your portfolio, hit that like button. It genuinely helps more people find this analysis.
Let me quickly touch on two more names that follow this same pattern. Palantir, down close to 24% year-to-date. That number sounds terrible, right? But zoom out. Palantir is up roughly 10% over the last 12 months. And if you look at the last 2 years, We're talking about a 10x move from its lows. The business itself? Growing fast. Government contracts expanding. Commercial AI deployments accelerating. The short-term stock chart looks painful. The long-term business trajectory does not. Shopify tells the same story. The stock isn't moving the way investors want right now. But the business fundamentals, revenue growth, merchant solutions, expanding international presence, those are intact. Here's the mistake I see people make constantly. They sell a great company because the stock isn't moving, and then watch the stock double after they're out. They buy what's hot, and then watch it give back half its gains. There is no relationship between you and a stock. The stock doesn't know you own it. It doesn't care if you sell. The only thing that matters is the business still going in the right direction? If yes, stay disciplined. If the business itself starts breaking down, that's when you exit. Not because the price chart is ugly.
So let me bring this all together. The most obvious buy in this market right now isn't in the names that already ran. It's in the quality businesses the market has temporarily forgotten about. If I had to rank my conviction on what we covered today, Meta is at the top. A world-class business at a valuation that genuinely does not reflect the fundamentals. Google and Microsoft are right behind it, both unloved, both growing, both building for the next decade of AI. Palantir and Shopify require more patience. The business stories are strong, but the market may take longer to recognize that. Know what you own, and stay patient. Here's the real lesson from everything we looked at today. The investors who are going to win in this market are not the ones who found the best trade last month. They're the ones who found great businesses, bought them at reasonable prices, and had the discipline to hold while everyone else was chasing noise. Stop comparing yourself to whoever got lucky on the memory cycle. Start asking, what do I own? Does the business still make sense? And am I paying a fair price? If the answer to all three is yes, you're ahead of most investors already. Do 3 things before you leave. First, smash that like button if this analysis was worth your time. Second, subscribe and hit the notification bell so you never miss a breakdown like this. Third, drop a comment. Which of these companies are you watching right now? I read every single one. I'm Alex Carter, and I'll see you in the next one.